This is John Pinelli, financial representative, talking to you today about how old you should be to invest in stocks. I personally would recommend to start looking at stocks and tracking stocks before you start thinking about investing in these stocks, particularly for the younger investors out there, maybe kids who are in high school or in college. Start to track stocks, see how you would do had you invested that money. Participate in a little bit of trial and error through simulation versus through trying out with your own money. But in more than age, I think it's important that you're in a position where you're financially stable at that time. If you were to lose a significant portion of your account, it wouldn't place you in a big financial burden. So I think more about individual maturity and individual financial standing is more important to consider when considering age. Also, an important thing to consider about age is that when you're young and you're starting out in your career and in life, the investment approach you can take is much different from someone who is older, maybe nearing retirement or finishing up their career. You can take an approach that might be slightly riskier when you're younger, because if you lose that money, you still have many, many years to sort of rebuild that income for retirement. Whereas if you're nearing retirement, you want to choose investments that are typically more stable and they're going to provide you with a relatively stable growth rate. So this has been John Pinelli talking to you about what age to begin investing.